Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Instant payments are coming to smaller credit unions. Can you believe that? Or maybe you think the real question is, will instant payments ever come to smaller credit unions? On the show are Bob West, CEO of Cuzo's CU South, which serves some 360 credit unions in 42 states, mind you, not just the South, and Keith Riddle of Payfinia, which has launched an instant payments platform that integrates with CU South's technology, meaning it's straightforward for a CU South customer to integrate into Payfinia's tools. Now get this, most CU South credit unions are smaller institutions. Lots are under $350 million in assets. What might have seemed a dream available only to the likes of Chase and Navy Federal now is available to small institutions. Question, does it matter? Question, will members use this instant payments technology? You'll hear answers in this show. Instant payments are a reality. That's a fact in today's immediacy economy. Credit unions need to climb aboard this train. Listen up.
Payfinia was actually incubated and launched out of a digital banking platform provider called Typho to operate independent of that digital banking framework and support credit unions of all sizes that need instant payment support, whether it's the FedNow service, the RTP network, or both. But receiving payments is often that first part of their journey. But where we started our actual instant payment journey was supporting sending of instant payments, because the member value associated with supporting both of that, sending and receiving payments, is dramatically higher than just relying on someone to send to your member. So although the instant payment vertical is very nascent within all the financial services, the credit unions are starting to awaken to the opportunity, regardless of size, of their members being able to move money when they want to, do so instantaneously. And the back-end network aspect is really something the consumer is not aware of. They just know I can move money immediately from my checking account at the credit union to an external account and hopefully bring it back in from that external account into the credit union. So it is something we see as emerging, but growth is on a very strong path, both for Payfinia and instant payments in general. And similar to the CU South, we're a credit union services organization structure. I have a pretty deep background in credit unions myself, from digital and payments and other efforts, and working for a corporate credit union for 15 years. So fully understand some of the very unique needs of credit unions and what they need to take into account in terms of embedding a service and launching a service. And that's why this partnership with CU South is very exciting for us.
Now, Anthropic Claude AI engine tells me that perhaps 5% of credit unions are doing something with instant payments. How do you react to that number? Does that sound accurate, inaccurate?
Well, I think if you look at the financial institution numbers that are published by both networks, one claims around 1,100 financial institutions, the other claims about 1,600 financial institutions. The vast majority of the institutions that join the instant payment networks are well under $10 billion in assets, so they're community FIs. And I think credit unions, I believe, are probably 40 or 50% of that. So if you look at the overall numbers, it probably is in that single digit to something that's creeping up pretty significantly because of the demand from consumers and businesses to move money immediately. They have no idea what the RTP network is or the FedNow service is, the end user. But the institutions are certainly hearing from those members about the need for expedient digital experiences and immediate money movement, which drive their engagement. But yeah, it's certainly a lower number today, but it's increasing pretty rapidly within both networks.
Now, what's the proof that consumers are asking for this?
I think if you look at just some of the transactional breakdown within the networks, so around over 40% of the instant payment activity on one of the networks today is basically what they call account to account transfer or a digital wallet drawdown. I can go into PayPal or Venmo or Coinbase or Robinhood or any of those experiences where they have millions of users, and I'm able to do an instantaneous withdrawal of my funds from that digital wallet from the fintech into my account at the financial institution. So actually, that is something that's driving a lot of the engagement, moving money into external accounts, because most members of credit unions have multiple checking account or financial services relationships, and being able to draw those funds out of those accounts back into my what would be maybe more primary or my credit union account. So 42%, to be exact, of all of the instant payment business to consumer transactions are account to account transfer.
Now, if I remember PayPal correctly,
Yeah.
I don't get instant transfers, but I'm cheap. I don't pay a premium fee.
Well, that's the scenario. Yeah.
I do the free transfer, which usually happens within a day or two. I mean, not dramatic time lag. So if you're a big time spender and you spend a few bucks that PayPal wants, you actually get it instantly. Is that true?
How PayPal is packaging that to all of the consumers, I don't want to speak on their behalf, but they have an instant withdrawal capability. And I know when I've done it and tested it in these various wallets, they still charge a fee. So maybe I'm not a big enough spender, Rob. So maybe that's it. But I think the other item is that there is a significant portion of the economy that's even been branded the immediacy economy, because of gig workers or folks that are running on a shift aspect, that they expect to get their funds that they've earned either for that shift or perhaps at a faster rate than waiting on traditional payroll cycles. So instant payroll, another aspect called earned wage access, and then also drawing funds out of the digital wallet, which Grubhub and Uber are digital wallets. Storing capabilities allow me to access the funds or what I'm due for my services I've done within those platforms. So that's the driver, is the immediacy economy. And the reason that's occurring is that I can go to most of these digital experiences and move money immediately or take action immediately. And that transcends into the credit union experiences they expect from CU South when they're in there performing their digital transactions.
Mr. West, when you talk with your credit unions, how conversant are they with the idea of instant payments? And do they want them?
They do. I mean, they hear, I'm going to say noise. They hear the same things we do in all the credit union journals, any fintech journals they read, any news, any podcast that they listen to. They're going to hear about instant payments and the need for instant payments. They have members asking for instant payments. And some of the stuff has been around a long time, just in different versions of it. We've all become accustomed to sending our kids money through Venmo or, paying the babysitter or the dog sitter or what have you. And I think the challenge we have, and especially in the medium to small space, is that they want to use technology to be able to deliver these services, but it's not always necessarily been available, or it's been available partially and it's not been completely baked yet. So they're sitting waiting on that, where they partner with some fintechs like Payfinian, and they have all the products and services available almost immediately. And I think that's what their members are asking for, because I call it the Amazon syndrome. Everybody uses Amazon. Probably a few folks don't, but you can order something from Amazon and it'll be at your house sometimes the same day, depending on the market you live in. They expect their money to be handled the same way. I want to send a payment. You were talking about PayPal. I remember us charging, and I worked in the credit, charging money to expedite funds to someone that needed to pay a bill that they were late on. They wanted to get it paid ahead of time. And yeah, that's what the members are demanding. They're asking their institutions for that, and they hear it. And they're all the advertising from the local banks, what small banks, community banks, and the big banks.
And do your institutions have the bandwidth to tackle this problem at this point? And the reason I ask is when I talk to most credit unions, all they're talking about is AI, AI, AI. You know, I did a show a year or two ago on instant payments, and I thought the topic was intriguing then. I think it's now. But in that year, what's happened is AI is just it's man, it absorbs so much credit union energy at this point. Now, big institutions have staffing and they can deal with multiple problems. A small institution can usually only deal with one or two problems like this at a time. So do they have the time? Do they have the energy?
No,
I
provide
think
a little feedback on that. Oh, Bob,
You can both take a swing at this one. It's
yeah.
So who's going to go first?
Keith,
Bob,
you started. You
I'll
go.
add my thoughts. Yep, go ahead.
Well, I think the small credit unions, you're right. They do have limited bandwidth. I mean, we have credit unions that are one branch. They certainly don't have the bandwidth to do multiple projects. And you're right. AI is dominating the news cycle and everything we do.
I mean, I find AI fascinating, but I'm kind of bored doing shows on it. I mean, I've done stablecoin shows just to break up the monotony.
It is, and but I find it interesting too. And my stepdad's doctor is absolutely frustrated with him because he's using AI, ChatGPT on his Android phone to search every medical thing that he thinks he has wrong with him, and then repeating it back to the doctor.
Well, that's a common complaint about med school students, where they
Yeah.
suddenly they're convinced they have this disease that only occurs in remote islands in Indonesia, but they have it. So,
right. Well, I think back to the payments. If you're going to be a financial institution, you have to address this some way, shape, or form. And you're right; they may not be able to. They have to prioritize their needs and their goals within the institution. But I think that's where CU South comes in. We really try to help our credit unions stay relevant. The market is shrinking. There's 3,300 credit unions left in the under 350 million space. That's where we live at, and our shareholders are credit unions. And, with 100 credit unions that we can help and care and feed, and trying to put technology in front of them that we think they can implement easily and at a price point that they can afford, because that's the other thing. They all want these things, but they may not be able to afford these things. And I think that's where the fintech partnerships come in. That they realize that they want to be in this space, they have to price accordingly as well. So I think that's what I see in this space.
And I'll just dovetail a few items that Bob indicated. So from a access to the capabilities, we wanted to make sure when we were rolling out Payfinia as a QSO and dedicated to democratizing access to instant payment capabilities, is to make those entry points for enablement of the solutions reasonable, so the credit unions in that swath that was just referenced, under 350 million, or maybe even a little bit higher than that, have the economic opportunity to participate. So that was key for us. And that's how we've structured our economic framework with partners and even direct financial institutions. The other thing, I think the instant payment capabilities and the instant money movement experiences that are a byproduct of these types of partnerships allow the smaller financial institution actually to level up quite a bit and compete with the larger financial institutions. So 7 of our 30 that are under contract, and actually those 7 are in production, are under 250 million in assets.
Wow.
We have one credit union that is only less than 100 million in assets. They didn't even offer same day ACH for money movement. They went direct to instant money movement support because of the capabilities we embedded in that digital experience and our layered fraud controls. So I think the educational aspect that credit unions certainly are trying to understand, what are the controls that I have that can prevent any type of significant risk that I would experience by deploying these capabilities. And we've got those fraud controls in our platform at a very granular level. And then how are those tightly coupled with the digital experience? And that's where partners like a CU South are incredibly impactful, because you integrate that capability once, and then those institutions using that digital experience and back-end core platform are able to accelerate access to those capabilities that are at the same or even a higher level than institutions that are much larger. So again, I think that's where we're perfectly aligned, accelerating the capabilities, democratizing access, and allowing these institutions to compete for new members and retain the members they have, versus losing them, potentially losing valuable relationships because of lack of capabilities.
I'm assuming you need core access, right?
Absolutely. We
Yeah.
absolutely need core access. And that's where, again, partners like a CU South are very important for us, because they enable that access and they make it affordable for their clients. And we certainly display that same type of effort in providing the service.
How does CU South enable that core access?
Yeah, so there is an API that certainly we have that we expose, and we integrate with the API capabilities that CU South has. I'm speaking from Payfini, and then certainly Bob can speak from a CU South perspective and how they manage that. But within both platforms, because they're both open and they don't create a walled structure around third parties gaining access to the core, as long as Payfini aligns to the capabilities and the technical specifications of integrating, that's again another huge benefit for a CU South client. They're enabling access to capabilities that the individual credit unions couldn't certainly do on their own.
Explain that to me.
Yeah, for explaining it, what we do is, again, the API capability that CU South exposes allows Payfinia to actually integrate into the platform and get access to the eligible data to look at, is the account active or eligible for instant payments? When they start to send payments, do they have the appropriate balance in the account before that payment is released? Because in instant payments, everything is an authorized push payment, which means it's good funds. Is there flags associated with that account that would mean that that isn't an eligible account when we receive a payment from another third party? So there are a variety of validation checks and balance controls, and then additional controls we have in our platform that make that a very safe environment for the credit unions to take advantage of instant payment capabilities.
Now, Bob, do you have members who are technically unable to participate in this?
Not necessarily, because I think it's, I'm not going to say it's simple. This application can be simply installed inside our mobile app, and they could access it and have some of the features and functions, just like a PayPal. I mean, all of us can access PayPal without doing very little input other than putting in the financial institution information. I think most of them can do that, and that's what really I think the benefit of this partnership is. We want solutions that can be implemented easily for our institutions, because they don't have the expertise. And this evolution of technology is evolving so fast. I mean, I've been in the credit union space for almost probably coming up on 26, 27 years, and I've been in credit unions. I've been in the fintech side as well. And I could tell you, at one time I would have been a proponent. Hey, I want that core system sitting on a server inside my data center. I would not do that now. I'm not being an advocate of that. And I don't want to write software. I don't want to develop software for my institution if I don't have to. There's people that do that better than we do. And if we spend all the time trying to develop these types of solutions, we don't spend time wisely and spending the investment that our shareholders have given us to further their development within their organizations. So I think that's the beauty of this whole relationship.
20 years ago, I wrote for Credit Union Times, and my beat was cores. And I pretty quickly realized that the average credit union CEO wanted to go home and sleep with his core. Seriously. The core had to.
Yeah.
And I was a big proponent back then of cloud. I might as well have been cursing at them. This was not, they were not receptive to the cloud argument 20 years ago. Now almost all of them are. Yeah, it's, but yeah,
there's still a few out there
there's still a few that want to sleep with the core. I know.
Yeah, they want it. They want to develop their own online banking application. They want to develop their own bill pay, which I find kind of hilarious at this point in time. Would any of us write our own general ledger or accounting software if we were starting a business? No, we would go buy it from someone that does it very, very well and has the ability to integrate it into our solution and ecosystem for our customers or members.
And nowadays, I'll say even billion-dollar credit unions do not have adequate, or so their CEOs will tell me, that don't have adequate staff to implement all of the technology they want. They need to use third parties. It's and they've become comfortable with that idea.
Right.
I mean, if you said, "Oh, we're gonna write our own whatever," I'd say, "Why? It's why don't you buy this thing that's already in use in 500 credit unions? It's why do you need to homebrew it?" But and more and more CEOs, when I hear it from billion-dollar credit unions, when they're really comfortable with the idea of, no, we can't homebrew hardly anything anymore. It's
well, I think you end up with a whole lot of other challenges, disaster recovery. I remember having to maintain and build a hot site, investing in servers and staff to support the hot site. And I can tell you that what I had then, even what some of my competitors have as far as disaster recovery, nothing compared to what we have now. We actually live and breathe our disaster recovery. Every couple months, we roll over to the system failover and run from there. A lot of these big credit unions would love to be able to do that.
Yeah. And Weather says we're going to need more disaster recovery tools.
Right.
Soon. Now, what's the timeline? A credit union says, okay, hey, I want to do this. What's it take, and how long does it take, and what's it take on their end?
For managing the deployment of instant payment capabilities, we work with credit unions and taking them through phases. So they'll start their first phase with receiving instant payments. And once we have the integration and the interface with the CU South platform, that becomes a very standardized process to enable all of those credit unions through that connection. So it could range anywhere from 45 to 60 days for them once they've signed and go through the onboarding process to be enabled for receiving instant payments. Then we have to work through what that use case looks like for being able to support send capabilities within the CU South platform. So those are typically 90 to 120 day timelines because credit unions want to do internal training. They want to make sure their member experience staff understands the capabilities and can respond to questions from their members. But an interim step where we work with the credit unions is allowing the credit union to send instant payments. And credit unions view that as a very valuable tool when they're paying their preferred auto dealers, or they may be taking transactions that were previously a wire transfer, very costly transaction, and managing it through kind of multiple handoffs within their staff to something that can be an instant payment workflow for a post-mortgage closing transaction or whatever that disbursement may be. So we've developed an experience where the credit union can send that gives them the comfort with instant payment capabilities, being able to do that in a very managed or controlled environment before they allow their members to send. So if you look at receiving payments within a 45 to 60-day period, when you're starting to send, probably a 90 to 120-day period because of those things I've outlined, but then they can have the interim step in the 60 to 90-day period where they, as a credit union, can send payments before their members do. And then obviously those times continue to be refined as more and more credit unions use that connection and the embedding of capabilities within the CU South platform.
When a credit union says, I don't need this, I have Zelle, what do you say?
Yeah, that's a really good one because we hear those things quite a bit.
You
Is
hear
this
that all the time. It's,
Yeah.
I got Zelle and everybody's happy as could be with Zelle.
And I think that Zelle has been a great network for person-to-person payments. And certainly they do small business disbursements as well, but it's only limited to being received by another Zelle user. So when somebody wants to move money between their account at the checking account at the credit union and an external account at JP Morgan, for example, that's not a Zelle transaction because it's me to me. It's not me to you. So that's where a account to account transfer, which actually has been indicated in various studies as the highest priority for credit unions and all community FIs, that they want to enable that to have instantaneous capabilities. So Zelle, it's not going to replace Zelle. The other aspect in terms of what we've seen with our clients, they actually have higher limits for account to account transfer capabilities that are instant than they do with Zelle. And the fundamental reason for that is that the risk mitigation tools we have for instant payment support exceed what they're using for Zelle controls, because Zelle on the back end, what people don't realize, the consumer moves money. I'm going to send money to you, Rob, and you're going to receive it and you'll be able to use that right away. But the process on the back end is all multi-batch for reconciling those payments, which comes with some challenges on reconciliation and settlement. And there are fraud challenges with Zelle that FIs need to take into account, which is why they lowered the limit per transaction. So we have all of our institutions that are on our instant payment service also offer Zelle, for most of them, I should say. And it is a use case that they don't necessarily disengage from. But if they are offering it today, the instant payment capabilities can offer greater limits, can offer an additional use case for that consumer or the small business, and eliminates all the reconciliation and settlement challenges because these traverse through the network instantly, and it settles and reconciles instantly between the sender and the receiver. So it eliminates the back office challenges.
I've only used Zelle a handful of times, always at the request of a contractor. I think they don't trust checks. They want the money now. And there's no fee involved with Zelle. So why do I take this guy's American Express card and pay 4% to Amex?
Yeah, that's true. It is a good small business payment collection method because they can just basically say, Zelle me, and here's my number or email address to do it.
I've rarely seen contractors so happy because the money's right there. Boom. No anxiety, no nothing. You mentioned fraud. I certainly have heard stories about fraud in Zelle, incredible outlets. I mean, New York Times, et cetera. And you talked earlier about your fraud prevention things. Why are you better in that than Zelle is? I mean, Zelle's backed by Chase, man. These are some big dogs.
Oh, yeah. And I think that it is not diminishing the fraud capabilities that are offered through Zelle. It's the process in which the transaction flows and how the back end reconciliation and settlement works between Zelle and an instant payment. So the reason why our solution is positioned as superior from a send perspective is that is how Payfinia started our instant payment journey. We actually powered the first FedNow send transaction in the country back in 2023.
Cool.
Yeah. And the reason that's important is that we had to build all the granular controls as to what they call velocity controls. How many times do you want Keith to be able to do an instant account to account transfer? For what dollar amount? Are there things you want to install what's called a cool off period? So when Keith actually adds his first recipient, I'm sending money to Bob. Do you want to give him a lower limit because we haven't seen Keith's activity and we're not sure that this device, although it's trusted through the device intelligence capability we have, it's the first time he's done a transaction. So you can actually gear down the limit to monitor activity for a period of time and then increase it once you determine what we call the binding strength. Keith, send activity to the receivers. Has there been any fraudulent activity? Have there been any returns or requests for return of funds? So those are all things that we monitor as part of our platform. And the fact that on instant payments, if I try to send Bob West $100, I have to have at least $100 in my account to do it because it's coming out of my account immediately. It's settling to the other institution immediately. And that's how you mitigate any type of overdraft aspects that also come into play with other payment methods. It's better on the back end. Our risk mitigation criteria allows for more fluid dynamics versus a static limit for everyone. And that gives the institution comfort as terms of they can still offer Zelle under the use case of P2P, for example, in a limit, but they can offer account to account transfer that's me to me and me to other with a higher limit, better fraud controls, and proven performance metrics in that.
Now, you mentioned, and it's true, that with Zelle, it's Zelle to Zelle. The recipient has to be a Zelle user signed up with Zelle. Does the recipient need anything in your world?
The recipient,
I mean, they need a checking account or something.
Yeah, they need a checking account. And that financial institution where that checking account resides has to at least participate in receiving instant payments on one of the two networks, the RTP network or the FedNow service, which again, you've got a vast majority of, I think there's 73% coverage on the RTP network alone of checking accounts, meaning there's 73% of the eligible checking accounts in the country that are already connected into the RTP network.
AI tells me many, many more institutions on FedNow are set up to receive, not to send.
Correct. And that's the opportunity for growth in the market. A lot of the institutions have started their journey with receive, which I just talked about our typical journey with a financial institution, but we try to make sure the institution understands the value proposition is in send. Because if you just go in for receiving payments, somebody's got to send before you derive any value from that relationship. And there are a lot of senders. PayPal, Venmo, Grubhub. There are 350,000 businesses on the RTP network alone that generate activity through that network. That send payments. So there is activity, and that's why they're processing, I think, 1.4 million payments per day. And then the FedNow is on top of that. But the credit unions need to look at ways that are going to deliver greater value to the member, a better experience, allowing them to send payments, not just receive payments. The next question is, what are the fraud controls? Both faster payments equate to faster fraud. Well, it does if you don't have the right tools, is the response. And then we walk them through what Payfinia can do.
Well, ACH payments are pretty rapid too. And
ACH, same day? Yeah, absolutely. So you're not going to replace that method either. So it's really extending the value of a payment method, not necessarily looking at disengaging all the other ones. Zelle is going to continue to exist. Same day ACH is going to continue to exist. But the RTP network transaction limits now are up to $10 million per transaction, both RTP network and FedNow. So I think you'll look at more B2B and certainly more B2C transactions that will continue to migrate into instant. And ACH will be impacted by it, but certainly same day ACH will continue to grow.
Now, what's the fee structure both for the institution and the recipient or sender, if any fees are involved? Zelle, unless it's changed, is no fee, which means the institution's paying all the costs.
That's right. So on the instant payment networks, both of them do not charge a fee for someone receiving an instant payment. So there's not a network fee. And then from the Payfinia perspective, we make it very predictable for the institution. We have more of a monthly service fee for managing connectivity into the networks and the platform capability for receiving payments. But then when they start to send is when they'll encounter transactional fees, both from Payfinia and from the network. However, those two items combined are still far less than even many same-day ACH transaction fees. And then you get the benefit of immediacy and reconciliation and settlement. And then when you look at standard ACH, I mean, that's a different consideration because there is a speed factor that you are foregoing, which is completely fine. And ACH, again, will continue to be an important ubiquitous payment method. They'll all coexist. It depends upon what is going to see migration into the new network as immediacy continues to be at the forefront for businesses and consumers.
Now, Bob, two questions for you. One, how are your credit unions going to market this to members? Credit unions, so often a credit union will tell me, well, we adopted this technology, but we didn't get really any pickup. And I'd ask, well, how did you market it? And marketing seemed to be a word that wasn't in their vocabulary. And the second one is, if they market it well, is this going to help keep them alive longer?
Yeah, well, yeah, I think your first question, we have some credit unions that they don't spend a lot of investment on marketing. Their investments are just trying to keep the lights on, and a lot of times we try to convince them that look, you do need to market. You need to.
Well, at least tell me you have the tool. I mean,
yeah, whether it's as simple as putting something in they still mail statements, especially all the small. I shouldn't even say that because I don't think that distinction exists just in small. There's a lot of folks still want paper statements. Some of the $1 billion banks and the credit unions are still sending out paper statements. But using a statement header for some advertising, I think booking with the partner with Payfinia for some of the reasons why you would use this product. And here's where you can drive some business for the credit union, but also why the members should use one of these solutions. I think being able to get that out there doesn't necessarily have to be this full-blown marketing ad campaign. Certainly, many of them may not be able to afford that, but I think in some cases they would want to advertise that. And I think that's they look. We're always trying to find solutions to drive revenue into the business. We have a product called Early Pay, and I was surprised. We have some credit unions that have done this for years. Bob, you get your paycheck on Friday. They're giving you access to it on Wednesday, and they've been doing it for free. For a lot of them, we have the product called Early Pay, which allows you to say, okay, we haven't ever given you that money on Wednesday. We've always given it to you on Friday, but if you'd like it on Wednesday, we're going to charge you $10. And we've had lots of premiums about that, and it drives some additional revenue into the business. And I think all those things helping them understand how they can do it with the least member impact, with the most bang for the buck to the business, really helps them stay relevant and help them compete in the space that they might not otherwise not be able to. They see their competition having a lot of these products, and some of them not. I think that's the beauty of these products. It does help level the playing field in some areas.
Oh, absolutely. I tell people, my credit union is a $1 billion institution, but I tell people that I can do anything I need to do there. I don't need all the capabilities of Chase. And if I did, I'd probably open a Chase account if I need to transfer money instantly to Kazakhstan. But I don't need to. So I'm pretty comfortable. It's
right.
And I think even a much smaller credit union would probably be perfectly adequate for me. Now, will it help them stay alive?
That coupled with other things, I think, I wouldn't want to be the one to say that this solely keeps them alive, but they can't let this pass by, I don't think, in the long run. Faster payments is here, no matter where you do it. I mean, everybody was slow to the game. The clearinghouse was the first. And, everybody had received for a long time. Couldn't do something. Then that now get off their butts and develop something. And I think you have companies that have kind of packaged all these things together, which make it nice for our credit unions. They don't have to sign up for just one thing. Now they have access to multiple things by just having one relationship. I think that will help them drive business to their credit unions. Because members, especially younger members, they want these options. They want to be able to move money to their friend, to wherever, and they want it to happen right away.
I think even older people might prefer to move money in a credit union rather than go to Venmo.
I think so.
I mean, I use Venmo because I have young relatives whom I think, as far as they know, that's the only way they can get money. And no, they won't use PayPal. You try to tell them PayPal owns Venmo. No, it doesn't matter, man. Only Venmo.
I think the interesting part of that, Robert, is that when you look at PayPal or a Cash App or any of the broader, what we'll just call very large fintech providers, they certainly are expanding into traditional banking services and have been for some time, but they're pushing that as the prominent aspect now. I mean, Cash App has already made it very public. They want to be the financial institution or financial services firm for all folks making 150,000 or less. That's a broad swath, and certainly there's a lot of crossover in community financial institutions in that segment. And their foundation is money movement as a Cash App framework, but it's broadened into a variety of things. And you mentioned about stablecoin and other attributes. So that's the danger that community financial institutions face in credit unions, especially in that lower asset segment, if they can't update their technology and their capabilities to compete for that same member/consumer that may be accessing those applications.
Yeah, and consequently, many of them aren't getting many of these younger consumers.
That's right.
And that's kind of a forecasting early death, unfortunately.
Well, and I think the other piece that the younger demographic has proven that they don't necessarily have a financial institution loyalty as the older demographic has, and they will move from institution to institution to get the products and services that they need. I think having a service that allows them to bank anywhere, move money to any institution, and I think Keith said that early on. Most folks do have more than one financial institution they've got. And it isn't always, 4 or 5 credit unions. It's probably a credit union, a bank, maybe a mortgage company, maybe an investment company. They want to be able to have that seamless transaction and flow of money. And I think they want it to be also secure. And the piece that I think we need to not forget is credit unions will build on people helping people, but it's also the level of trust that they've built and expected within that institution. They expect that same level of trust to be conveyed to any organization or company that we partner with to deliver those services for them.
Yeah. Keith, last question. Can a credit union extend these services to a business member?
Yes, great question. So that's a segment where credit unions, as you know, are becoming increasingly active because of the SMB, the small and medium business vertical, and being able to be well aligned in the community serving those types of businesses. So absolutely. And
cool.
what studies have indicated repeatedly is that business vertical, they're willing to pay for receiving payments as well as sending payments because is indicated by many studies, cash flow is critical to these SMBs. And anything that accelerates the cash flow allows them to maintain that cash flow as long as they can and then disperse for their obligations. That's a value proposition that certainly credit unions can fill, along with the liquidity and the data. I know we've talked a lot about the fraud and the instant payment movement, but the data that is available to the financial institution, the credit union, in having these business members that send payments and receive payments you can get a pretty good profile on that business from all the data that's exchanged and start to tailor solutions to that business that would be very impactful for them. But yeah, we're excited about the business opportunity. We think that's a significant growth framework for credit unions.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey. Again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.